To the market action of the day, a late surge helped the Nifty and the sensex end another range-bound session close to 0.5% in the green. Banks led from the front, with the Nifty Bank ending the day at a record close. The index ended above 42,200 for the first time ever. Mid-caps underperformed the benchmark indices, with the index ending the day flat. Prashant Nair joins in with a wrap of all what took place today. Prashant.
It was a late surge which showed up in the Nifty, and the close was finally above 18,400. A flat day for most parts, but a very different looking screen by 3:30. The gains came through in banks and ICICI Bank in particular. Actually, about 35% of the Nifty gains were on account of just ICICI, and its contribution on the bank Nifty was even larger because of the nature of the index. ICICI Bank and SBI, the two pillars, but ICICI, of course, doing bulk of the heavy lifting. Outside of banks, ONGC, Power Grid and Bharti were some of the other stocks which did quite well. Overall, I mean, the mid-cap index, small-cap index, not quite keeping up with the Nifty. So market breadth was 1:1, advances to declines ratio, and lots of stocks lost on big volumes. So names like Coal India, Nykaa was down big time today. Naukri, that is Info Edge, lost quite a bit. Campus Footwear recovered from the lows, but that's been a absolute, I mean, it's got hammered after the results. DCX India, recent listing. Fluorochem is corrected. Aster DM, VRL Logistics, Global Spirits, some of the names. What did well? Rail infrastructure stocks continued their run. So RVNL, Railtel, defense names like Mazgaon was up about 5%. Gujarat Gas was higher. NCC, Garden Reach and HPL Power, to name a few. So very, very stock-specific market. It showed up on the index because of ICICI mainly, as I said. But I think what lies ahead is, at least from the US session, is more Fed speak. We will hear from policymakers on what they want to do in terms of, the rate policy in the US. So there are two speakers lined up, lots through the course of the week. And after the CPI numbers, we get the producer inflation numbers later today out of the US as well, which gives us a little more idea on how things are developing.
Okay, all right, Prashant. Thanks very much for that. Well, let's get in some expert opinion then. Gautam Trivedi, co-founder and managing partner in Nepean Capital, said that the Indian market has had a good year so far. He added that the key factor holding up the Indian market has been the domestic investors.
With respect to India, we're the second best performing market in Asia after Indonesia, which is fantastic. So we're year to date down only about 5%. We've significantly outperformed the MSCI emerging markets, which is down 26%. We've outperformed China, which is down as much as 32% this year. And also the S&P, which is down 16%. So I think we've had a very good year so far. I think the one factor that you must keep in mind is that the Indian equity markets have been supported for the past about 18 months or so by domestic demand and domestic retail and institutional investors, not so much by foreigners. The only thing that's been holding up the market in India, in spite of the relentless selling that we've seen this year by foreigners, which is about roughly 20 billion odd of year-to-date selling, has been the domestic investors.
Okay, well, let's get in some more opinion then. Vikash Jain, India strategist at CLSA, said that their current strategy is to go overweight on the big laggards. Listen in to what he said.
We've been underweight IT for a long time. That has turned into a very small overweight, neutral to overweight IT now. In our opinion, the big trade to play would be from here on, particularly in the last few weeks of the quarter of the year, we see a tendency for laggards to play catch up. And there are a lot of laggards that we have in our portfolio at this point of time. From that perspective, it's a rather anti-consensus portfolio that we run. And, IT could be one of them in general. Banks is a rather consensus overweight. That's not really something which is very different anymore. We've been overweight on banks for a while. If you look at the setup, we expect yields to kind of continue rising in that kind of a setup. These private banks could have NIM expansions. So that's something which we continue to play.
Okay, so that's some opinion, but let's get to the second story that we're tracking this evening. ONGC gains 2% on higher than anticipated realizations. The oil PSU also beat street estimates on revenue, EBITDA and profit after tax. Sonal Bhutra is standing by with a wrap on the company's performance.
thanks a lot for that. Well, yes, strong set of numbers coming in from ONGC, and it was not just good numbers, it was a big beat versus the parameters. Of course, quarter-on-quarter numbers were lower because of lower crude prices. But look at the numbers versus the poll. Revenues at 38,320 crore rupees, which compares with a poll of 35,560 crore rupees. EBITDA at 18,811 crore rupees, which is 1,000 crore higher than the poll, which was coming in at around 17,000 crore rupees. Margins at 49%. Yes, they have declined on a quarter-on-quarter basis, but profits also 3,000 crore rupees higher than what the poll was suggesting at 12,825 crore rupees. Surprisingly, net realizations, that is crude oil realizations, they have come in higher than what the street was working with. It is a 37% YOY growth versus an expectation of just 7% YOY growth, and the number has come in at $94.96 per barrel. So good going for ONGC. Now the next thing to watch out for will be how the windfall taxes are decided every fortnight. That is the way. And also crude oil prices, overnight they were down, but we need to watch out for the trajectory. But net oil realization strong at $95 per barrel, and that's why the stock is buzzing in trade.
Okay, all right. Thanks very much for that. Well, let's move on then. On the other hand, NMDC lost 4% in trade after a second quarter where realizations dropped significantly. Nigel D'Souza is standing by with more.
Well, that's right. NMDC's numbers are actually disappointing on the top line, the margin performance, as well as the profitability. Let's run you through a couple of factors that played out. First, on the top line, we had the provisional sales numbers with us. We were expecting close to around 8.7 million tons odd. The number came in at around 8.4 million tons. So there was a miss on the volumes front. Not just that, even realizations, they contracted more than expected. They were down by close to around 48% on a year-on-year basis, which was far more than what the street was expecting. So it was a top miss, which later, percolated to the other parts of business. That's the operating profit as well as the PAT. Now, another factor that hit the operating profit, besides lower volumes as well as realizations, was the employee costs that spike up. That's what hurt them. On the profit front, though, there was some kind of support that came in from other income. Remember, they've demerged the steel part of their business, so maybe the one-time income did come in on that front. Citi, they have gone ahead. They downgraded the stock to sell with a target price of around 100 rupees. They struggle to find upside triggers until the government withdraws that export tax duty that's currently levied on iron ore. So all in all, a weak set of numbers explains why the stock was lower in trade.
Okay, all right, Nigel. Thanks very much for that. So that's on NMDC. But on to the third story this evening. Tyre companies Apollo Tyre and Balkrishna Industries clocked gains on strong performances for the second quarter of the fiscal. Apollo Tyres closed 5% higher after beating expectations on sales and margins. Sonia is here with the details on the company's earnings.
Well, thanks for that. Apollo Tyres hit a fresh 52-week high today after reporting a very good set of numbers. In fact, across the board, it was a beat by the company. The margins went up 40 basis points on a quarter-on-quarter basis and have, been higher than what the street was estimating. More importantly, the European business margins have improved sequentially, and the EBITDA growth in the India standalone business came at a time when peers like MRF and CEAT reported a fall in their EBITDA. So compared to peers, Apollo Tyres has been standing tall. The revenue growth was also quite healthy, a 17.5% growth. The only problem for Apollo Tyres, the niggling worry, is the rising debt situation. So the net debt in Q2 has risen to 5,470 crores from 5,100 crores in the previous quarter.
Okay, all right, Sonia, thanks very much for that. That's on Apollo Tyres. Meanwhile, Balkrishna Industries also gained 5% as volume surprised and margins were above expectations. Sonia is still with us to tell us about what went right for that particular company.
Well, I'm also watching out for Balkrishna Industries. The stock was very volatile today after the company decided to suspend its annual guidance for volumes for the full year, saying that the situation is very challenging in Europe. Balkrishna Industries told their investors that the challenging situation in Europe may put further pressure on their business in the second half of the year. Not just that, there is a downward revision in their capex plans as well. The reduced capex now stands at 335,000 MT per annum. The margins were also under pressure. The EBITDA fell 21% for the company this time, and in Q2 the margins fell to 16% versus 25.9%. However, the stock did recover in late trade.
Okay, all right, Sonia, thanks very much for that. That's on a lot of the tyre companies which were in focus. Time for a break now. But before we go, we leave you with some comments from BSE member and market veteran Ramesh Damani on his investment strategy and top sectoral bets.
If I want to ask you about Nifty from